Hey everybody, and welcome to the Plant Stock channel. Hope you guys are doing good. You're here with me and Mayur. We're going to talk about Oatly today and their upcoming Q4 and 2021 earnings report. Before we start, as always, just a quick reminder that whatever we talk about now is just our own opinions, just two friends talking about companies we're interested in, like Oatly. It shouldn't be construed as any financial advice. So that's just important to keep up. All right, guys. So how you doing, man?
Hey, how are you? Good.
Yeah. So it's been an interesting day again. Extremely a lot of volatility. I think Oatly is down like 7% or something. Last I saw. If we take a look here, yeah, right now 7.58, and I think most of our stocks are actually tumbling down. Beyond is down almost 7%, and TTCF minus 5%. BayBF 2. Actually, VGFC, the very good food company, is the only one of the companies we track here that's actually up a little today.
Mhm.
But yeah, so I'm thinking what I've seen so far is all the instability again with the war and what's going on down there. But do you have any other theory?
Yeah, I think it's just ongoing tensions with, between Russia and Ukraine. There was that big scare that we saw last night,
Yeah,
where Europe's largest nuclear facility was on fire.
yeah,
Um, it may have been overblown in terms of how big that fire is
yeah.
or the threat to it, but again, it doesn't give anyone comfort to see that happening.
No, obviously, especially when the Ukrainian president says that if they would have actually blown it up, it would have been 10 times worse than Chernobyl in 1986. So obviously,
Yeah,
that's going to rattle some feathers.
right. So
Yeah,
yeah, I think it's just overall market jitters, and this is in the context of a broader market sell-off anyway that I think was already underway even before this war broke out.
yeah,
Uh, with the Fed, talking about raising interest rates, Jay Powell was on just 2 days ago this week on Wednesday,
yeah,
and he basically reiterated the case to raise rates here in the U.S. by
yeah,
25 basis points. So
yeah,
I think they're ready to go with that. They are seeing that inflation is running out of control now, and they want to at least show that they can, do something about it.
yeah,
So we'll see if that's effective or not. I personally don't think it will be, but they have to do something. So that's what he's
yeah,
talking about doing. You know,
yeah. But do you mean that you feel it's way too little? Because they were talking about 50 basis points, and now probably because of the war, they're taking it down a notch.
yeah,
But you feel like they should probably raise it more, or
yeah. I think they should raise it more. I talked about this last time. I think they're just way behind the curve on this one.
yeah,
They should have been raising rates. The moment that we got past like 50% vaccination rate here in the US,
yeah,
after that point, it's like, you can't just keep waiting around, hoping that, COVID is going to go away. If we've already been vaccinated, the vaccine is shown to be effective at preventing serious illness. Um, if the majority of the country has gotten vaccinated at this point, and it's readily available everywhere. Everyone has had plenty of time to get it. Um, at that point, there's no need to continue to wait around
no,
and be afraid of COVID at that point. And so
exactly,
we're probably about 6 months late on hiking rates, and I think at that point it gets out of control. You know,
yeah. All right. So basically, yeah, we're going to focus on 3 points here that you have highlighted. The first one being growth in oat milk sales velocity and margins. And after that, we thought we would talk about what to expect on their Q4 earnings plus outlook for 22. And lastly, then, how massive of an opportunity Oatly has in disrupting the traditional dairy industry. So
yeah,
we'll begin then with the growth in oatmeal sales velocity.
yeah. So let me share my screen here. So Oatly is a very very exciting company. I was late on getting on board with Oatly, just probably mainly because they were private all this time. But I remember having an oat milk latte for the first time at a local coffee shop in New York City back in 2017, and it was so good. I actually thought that they mistook my order and gave me a regular a regular latte with dairy milk in it.
Yeah.
So I had to go back and ask them, "Hey, can you confirm to me what's actually in this?" And they're like, "It's oat milk." And they showed me the oat milk, and it was an Oatly barista blend, oat milk. And I was like, "This is it. Like, this has to be the ultimate dairy replacement," because I've been vegan for more than 10 years. I've had all, of the plant-based milks out there. They're all okay. But I think oat milk took the crown immediately. I realized that this thing is going to sell.
Yeah.
Um, so that was the first time I saw it. That's when I started becoming a customer of Oatly. But then they just went IPO last year, and now we can actually all participate, in being a shareholder. But I never was a shareholder because of valuation concerns, because the stock traded at an exorbitant multiple to revenue. It's a great company, great growth, huge opportunity ahead. But as an investor, you want to see a valuation that makes sense given where they're at today,
Yeah.
rather than pricing in too much of that future growth already today. So the stock was trading at 20 times revenue. And I knew from history, stocks that get to that level of multiple on revenue, unless if they have giant profit margins, the share price performance over the medium term is usually not good. Um, and so that's kind of what happened and ended up happening, where now that we've had this growth correction, Oatly, along with everything else, has come under significant pressure. And now, for the first time, I believe that Oatly is properly valued given where they are today,
Yeah.
to be able to give investors significant upside, if they were to continue this growth trend that you can see here. So I just have a chart of Oatly's growth in terms of total revenue since they started reporting numbers as a public company, and they did about 200 million in sales back in 2020, and that more than doubled to 421 million. The year after that, and actually this might be incorrect. Sorry, I think there's an issue there. They've done more than 400 million. In
Yeah.
revenue for 2021. So let me go back
Yeah.
to
Yeah.
my model here.
That was for 2020.
2020.
Yeah.
Okay. Okay. Maybe I mislabeled the dates there.
Yeah. Yeah.
So this was 2019, 2020.
Exactly.
And yeah.
Yeah.
So, the growth is phenomenal. It's a 92% CAGR from start to finish. And this utilizes analyst estimates. So we're looking at just under $1 billion in revenue for this year, 2022. And so this will probably make Oatly the very first plant-based company to cross 1 billion in revenue,
Yeah.
which is a huge milestone. I thought Beyond Meat would be that company, but I think now it's looking more and more like Oatly is going to be that, and for good reason. So it's amazing. I didn't know this, but apparently over 80% of East Asia is lactose intolerant.
Whoa.
Um, So I didn't know this, but I just discovered it when I was listening to Oatly's conference call. And then I just Googled it to double check that. And in fact, it is like, more than 80% of East Asia is lactose intolerant. That probably explains why milk has never been, dairy milk has never been a big part of the diet of, of the Chinese and
Yeah.
of other East Asians. So this represents huge opportunity because dairy has never been a big thing. So you don't really have any very, very little competition that Oatly has in China.
And at the
So
same
that's
time,
huge.
like you said, it's perfect timing because, yeah, Chinese culture and Asian culture, they are obviously mimicking Western diets more and more, like we are mimicking their diets. And they have been starting the last couple of years actually implementing some dairy among middle class citizens, and the same thing with eating more meat, like they didn't used to. So now quickly coming up and maybe giving them plant-based alternatives could be the perfect move and perfect time.
Yeah, yeah, exactly. And there's this the growth is one thing, right? It's obviously that they're growing at an incredible growth rate. Um, and I think they're going to grow at 50% this year over last year. So the growth rate is just absolutely phenomenal.
Yeah.
But what's also interesting is how that growth is actually being delivered. So we have this right here from their investor deck. This is from Q3, and this is the growth rate of sales in North America here. But what I think is also even more interesting to understand what's underlying this growth is the velocity of growth. So, you can have growth through, one of multiple ways. Either the same number of stores simply sell more product, or you simply increase your TDPs, right? And that's the term for food companies, total distribution points. So the more you make your product available in more numbers of stores, that's how you can also increase sales, right? So, but what's happening here with Oatly is that you can see that the bars here represent the total number of stores, right? Total distribution points that that carry Oatly products, and you can see that that number is basically doubled. There's over
Wow.
12,000, right? Versus in 2020 when that number was almost half of that. So the number of stores, the number of points at which you has more than doubled, and you can see that the velocity of sales really hasn't decreased at all, right? Because as you make your product more available, it would make sense that each store would sell fewer products a little bit, right? Because
Yeah.
it's so available. This store might not have it. So if you just go 1 mile down the road, another store would have it. So as more stores carry your product, usually what happens is each store sells slightly less. But in this case, you can see that total distribution points have skyrocketed, and each store is still selling roughly the same amount of product every week. So what this is telling you is that during Q3, each store sold about 41 units of Oatly products every week.
Hmm.
And that has basically remained unchanged despite doubling the number of stores that Oatly has. So that, in my view, is a very, very important trend to keep track of.
And this is
Is it's
during during the pandemic also that they doubled.
yeah,
So that's impressive also.
yeah, yeah, exactly. And also, oat milk, at least in the U.S., is not as prevalent as oat milk in Europe. So there's another chart here that tells you exactly the market share of oat milk versus other plant-based milks. And you can see that here in Sweden, it's already dominant, right? 77% of all plant-based milk is oat milk. 9% is others, right?
Yeah.
That point where market share is crossed already was achieved in the United Kingdom. It's already been achieved in Germany. So I really think that that same trend is about to happen in the US, and you can
Yeah.
see that trend happening right now.
And I think it's Oatly that's driving that trend also, because even though it says in Sweden 77%, about 53% of the overall plant based milk in Sweden is Oatly. And in the majority in United Kingdom as well. And I think the same is true in Germany or very close to it. So that's,
Yeah, exactly. Yeah, and you can see this sort of the breakdown here, where plant-based milk penetration of total dairy, right? In 2019 in the U.S. it was about 8%. That's now grown to 11%. So these numbers are moving in the right direction, and they're very small overall, right? I think that plant-based milk as an overall category, relative to dairy milk sales, and I'm not talking about foods that are based on dairy, such as cheese and yogurts and things like that. That might take a little bit longer um, to for consumers to phase out of. Cheese may not really phase out completely, may never phase out completely, but I think milk is vulnerable, dairy milk,
yeah.
because not many people really care about dairy milk, right? Yeah, I mean, sure, people like the taste of milk, but I'd be hard pressed to find someone that doesn't like the taste of oat milk. And everyone knows what oat milk tastes like because every culturally speaking, in the U.S. as is in Europe, right? Everyone has oats, right?
Yeah.
Everyone has oatmeal growing up as a kid, and the liquid at the bottom of your bowl of oatmeal is basically oat milk, right? So everyone knows what oat milk is, and it's a very easy sell, right? Unlike Beyond Meat, you have to kind of get over a lot of stigma behind plant-based meat. Is it healthy? Is it processed?
Yeah.
And people love steak, right? It's hard for people to give up steak. It's just it's a very very difficult task to do.
And I think it's even
However,
harder when it comes to stereotypically men, because normally plant-based living to begin with is usually more prevalent among women. But it's obviously growing now, and the whole thing, real men needs meat, that's going to be a tougher sell overall. But the whole milk
yeah,
discussion seems to be more and more accepted. That
yeah,
that is probably not meant for human. That basically eating the secrete of another animal doesn't maybe make that much sense when you think about it.
right,
Mm.
right, exactly. Especially given the fact that cows are a significant contributor to methane
Yeah.
emissions, right? And so this entire milk industry is an industry that really doesn't need to exist. Um, I guess you can make the case that the meat industry needs to exist because it's going to be very, very difficult to convince 100% of the population to give up meat, right? So I don't think that's ever going to happen. But I think dairy is vulnerable. People are not clinging to milk the way that they cling to chicken or steak, right? And with the rise of lactose intolerance, people get even for people that don't have lactose intolerance, people get gassy from dairy.
And also
I've actually noticed.
milk protein issues and allergies too. It's not the same as lactose intolerance. It's just the protein in dairy altogether, which is also growing and becoming more prevalent in many populations. So yeah.
Right, right. And I know for a fact, like I'm into Ayurveda, right, which is the ancient Indian, herbal medicine tradition. And I've actually talked to a few Ayurvedic doctors, and they believe that dairy milk is not good for people who are like if you're recovering from sickness, or even during the winter months, dairy perpetuates cough and cold longer than it should. And I've noticed this myself, where ever since I gave up drinking dairy milk, I don't have like that phlegm in your throat that you get, build up, sort of that mucus that builds up in your throat
Right.
when you have a cough or a cold or things like that. I just have much clearer sinuses ever since giving up dairy, less inflammation. So there's so many benefits to dairy, and people are not clinging to dairy, right? The way that they are, hardcore about having their steak or their beef or their chicken for dinner. So I think dairy milk sales are extremely vulnerable to losing significant market share. And we can see a graphic here that CNBC put together. They did a video on Oatly, and you can see where the trend of cow's milk is going. Right, it was a $16 billion industry back in 2015. This is just in the U.S. alone, and that number has dwindled to 12 billion today as of 2019.
Wow.
And I think Oatly enters and becomes a bigger force in the U.S. I believe Oatly will be the significant contributor to cow's milk's further decline.
Yeah.
You can see oat milk sales are now increasing. I believe it should overtake almond milk as well, and Oatly is going to be a significant driver, of that market share gain.
That's interesting
So
also because I would say if you look at the stats of most countries in the world, uh, per person, anyways, we're only 10 million people in Sweden. We probably eat way more dairy in the U.S. When it comes to all kinds of dairy products. And the interesting thing is that, kind of like the U.S., then I guess, they're talking a lot the last couple of years on the news in Sweden about how dairy farmers are basically going under and under. and they don't know what to do, and the government is trying to help them, subsidies. But I do know that in Finland they've had the same issue, and I think they actually drink way less milk now, and their dairy farmers have started converting to berry farms instead. So that would be a solution, or maybe oat
Yeah,
farms.
yeah,
Yeah,
absolutely. And the other thing too is that the dairy milk production process is very capital intensive too. And ultimately the question is, why are we doing all this, right? What's the benefit of dairy milk, right? Sure, it has vitamin D, it has protein, it has calcium. That all of that can be obtained through plant-based sources. And if we can do it in a cheaper way, in a more efficient way, um, and it frees up a significant amount of feed, right, that we have to feed these cows and maintain a much higher cow population than would otherwise be necessary, and cut down on those emissions from dairy cows. It's almost a no-brainer, because we're producing a product, dairy milk, that isn't actually demanded by people. It's what people want is a liquid basically that provides you these nutrients and tastes good and goes good with things like cereal
and
and
keeping up
cookies and other things
keeping up
like
with
that.
tradition and cultural values,
Right.
the comfort foods that we're always used to. So,
Yeah.
so if we can get a healthier version of that, because let's be honest, in the end, drinking water is obviously the best. But if we want something second best, this definitely seems to be it. And we're not going to change cultural values that's existed for hundreds and hundreds of years.
Right. Right. Exactly. And it's just fascinating because, like, if you even pull you know plant-based milk is here to stay, and I think it's going to overtake cow milk.
Definitely.
Um, it may not overtake plant-based cheeses, may not overtake dairy cheeses. Plant-based yogurt may not overtake dairy yogurt, but the milk category is what is completely vulnerable, right? And that is a $16 billion industry in the U.S. alone.
So
In
on
China, this market is virtually untapped.
right,
Um, and it's a similar number in India as well, which is a huge India is a massive consumer of dairy milk, right? And that's another reason why I'm super bullish on Oatly, because I chai is religion in India. No matter what religion you belong to, you also adhere to the religion of chai, especially masala chai. Everyone loves it. And I've made chai with Oatly, and it is excellent. And I've had my entire family try it. My wife, who's from India, grew up on chai. She tries it and she loves it. It's gonna sell, pending, like, price, getting the price right to where the majority of Indians can afford it, or at least a good chunk of Indians can afford it. That's one thing that is still to be seen with regards to price, but it's something that I think will sell.
definitely, definitely.
And
And on that note, then, so what should we expect under Q4 earnings and the outlook for 2022?
Sure. So let's open up Excel world here. So here's my model that I just put together for Q4 and for the full year 2022. And I have a couple of notes that I wrote in here as well. So I'm expecting roughly 45% growth in Q4. So that gives us about $184 million quarter for Q4. That compares to 171 last quarter in Q3,
So
and
how much did you say? 184.
184 million. Yeah.
Okay, so because basically, yeah, Wall Street is expecting 178, so 6 million over that, hopefully.
Yeah, and I think that's gonna come from just superior distribution. They've been working on issues going on in their Ogden facility in Utah, here in the U.S. During Q3. I think it's going to get resolved in terms of that production hiccup that they had in Q3. And this is within their guidance as well. So they think that they're going to get this type of number for Q4. So that's going to be my number that I'm kind of going with here. But what's a little bit more important, or just equally as important, is the gross margin. that I'm getting over here. So I think the gross margin for the quarter will be about 21%. So that's going to come down from last year, from last year as well as last quarter. And the reason for that is, again, I think there are ongoing issues with higher logistics costs, freight costs, right? Trucker shortages. And again, delays in that Ogden facility that they were talking about during the last quarter here. But also there's, significantly rising oat prices too. So, this is one of the things that the Fed is looking at, right? Is cost inflation in energy and commodities prices.
But I'm also thinking about, because even though the oil prices is going skyrocketing right now, has been going up for several months too, and transportation costs will obviously be higher during these quarters. So that will also, I'm guessing, go into the margins.
Exactly. And that's why I think that there will show a deceleration of gross margins this quarter. So my expectation is that it's going to be 21%, which is down from, I believe, 26% last quarter. So that's my sort of expectation there. We'll see where it ends up. And it'll also bring the full year gross margin to 26% overall.
Yeah.
So that's including that fourth quarter hit of, bringing it down to, 21%. So, I'm expecting roughly a 10% growth year over year. And again, that's mostly because of this gross margin hit. So we're going to see a phenomenal growth rate year over year on the top line of 45%. But because of these short-term issues that we're still working through, gross profit will only grow by about 10% year over year during this fourth quarter.
Yeah, just something I got surprised. I'm not sure. Did you listen to that Citibank interview with the CEO from December? According to the CEO, if I didn't misunderstand him, it seems like in Europe, anyways, because they've been there way longer, right? And the production there is probably more efficient. Also, this, if I understood him correct, they're actually at a profit in Europe.
I didn't hear that, but that would be very interesting if that was the case.
Yeah.
Yeah, that would be very, very interesting if that was the case in
So,
Europe, at least.
yeah. So, but
I
maybe.
think they're European factories. If I go back to the so there's a slide that talks about where their factories are and how much needs to be like what is under expansion here.
Yeah.
So it looks like they're okay. So they have plans to expand the Netherlands factory in 2023. So that is, an upcoming one. But their factory in the UK and their factory in Sweden are basically fully up and running.
Yeah.
So that would make sense since they have two factories that are up and running
And supplying
and
Europe.
yeah, exactly. So then it would make sense that they are, at least near break even or even in the profit zone in Europe.
Yeah.
Because
Exactly.
of two factories that are now operating at full capacity.
Yeah. So, but one thing I'm wondering about here too, I'm just going to quickly share my screen here,
Yeah.
is that when it comes to their balance sheet, right now, I mean, before we know Q4 report, they have a total cash of 708 million and a total debt of only 127 million. The interesting part here is that those 708 million, Beyond Meat has basically the same, but that's basically all debt and then some. So this actually puts, I would say, Oatly to a pretty attractive position when you compare them to especially other plant-based companies out there. That yeah. And so what I'm thinking is, because there's people that are afraid that they're going to have to do some form of dilution sooner or later, but I'm thinking they're probably good to go for quite a while.
Well, let's see, because they definitely have more cash than debt on the balance sheet, which is good. They have a net cash position. However, if they are to pursue these investments in factories, that's going to be a pretty big, driver of capex, right? Capital expenditures. You can see their plans right here. That in 2021, their capacity is reaching 600 million liters of oat milk per year. In 2022, that's expanding to over 1 billion
Yeah.
liters. And in 23, that grows even further to 1.4 billion liters. So this is going to require some capital outlays here. And so according to their slides here, and we'll see if this gets updated, because I think it might come down a little bit just so that they can conserve a little bit of cash as they walk through these other broader macroeconomic issues that are going on that's affecting basically everyone. But they're guiding for somewhere between 400 to 500 million in capex this year.
So that's basically what they have left now if we take away the debt.
Right,
Hmm.
right. So it's quite a lot of capex. Now we'll see if they issue an updated guidance to this number and if they bring this down a little bit. But if they have plans to go full speed ahead and chase this opportunity that they have, it would make sense for them to do a capital raise then. And unfortunately, the stock is down. It would be great if they had done it, in hindsight, when it was above $10 or $15 a share. But, I think that they may have to do a capital raise just so that they don't delay their plans, and continue to play full court offense.
And you
Right.
and you see them doing that through a dilution.
I think they could do it in a variety of ways. If you believe in yourself and if you believe in the success of your company, then there's only one option, which is to do senior debt, to issue senior debt, right? Which is just purely debt that's backed by your assets and nothing else.
Like a bank loan.
Kind of like a bank loan, yeah. Sort of like a bank loan, except you're offering it as a security, so it goes out into the bond market for investors to buy. But that's a slightly costlier form of financing. However, interest rates are still quite low, but they have moved up, though, especially for low quality issuers like what Oatly would be considered, since they're not profitable yet. So that would be, if you believe in yourself and if you believe in the future of the company, and if you believe that you will be a very profitable company in the future, then issuing senior debt is the best way to go, because it does not dilute shareholders, and the cost of financing is still significantly lower than your ROIC, right? The return on your invested capital, right? So if they're going to spend $500 million, and let's say in 5 years from now they're going to be doing 20% adjusted EBITDA margins on, say, $4 billion of revenue, right? That's $800 million in adjusted EBITDA, and capex somewhere in the 400 to $500 million range.
It'll be easy to pay
Between
back.
It would be very easy to pay back, yeah.
So
And that's a very high return on your investment. So if you believe that, then senior debt is the best way to go. But if you wanted to reduce the risk, then what Beyond Meat did is the way to go, which is to issue convertible debt. So that reduces your cost of borrowing slightly, but you have the potential to dilute shareholders if you do succeed.
Yeah.
And if you don't succeed, then you still have to pay off that debt anyway.
Yeah.
And then the last option is just straight equity, so to dilute shareholders. And that you would do if you just don't want to take on significant amounts of risk. So it all depends on what Team Tony views in terms of what they expect for the future. All right. How close are they to achieving their targets of 20% adjusted EBITDA margins, which you can see right here on this slide.
Yeah.
Long-term targets, 20% adjusted EBITDA margin, 40% gross profit margin.
Exactly. So if we go to the last part now, but I do think we probably touched upon it
Mhm.
when it comes to how massive of opportunity Oatly has in disrupting the traditional dairy industry. So yeah, we touched on, but if we basically just try to end it with that discussion.
Yeah, so like as we said, there's a $16 billion opportunity in the U.S. And quite a lot more throughout the world. The plant-based milk industry, I think, is going to attack the dairy industry, basically the cow milk industry. And so that's the lowest hanging fruit for Oatly to go after. Total, the entire dairy market worldwide, including all dairy derived products, is well above $800 billion. So that's a massive opportunity. Obviously, Oatly is not just sticking to milk, but it's also into a variety of oat milk based products such as ice creams, such as yogurt, such as other products, candies, things like that, chocolates. So there's significant opportunity for them to grow, and even if they don't take 100% market share, right, for the plant based side of things, the market overall is so large that even if it gets to 10% market share or even 5% market share, I think because of the popularity of oat milk specifically within the plant-based milk industry, because of its versatility, because of its taste, um, I think it's going to be a significant driver of that market share gain of plant-based milk versus cow's milk.
Yeah,
So 800 billion is that market overall.
I have a
That
question
is
for you there, because the Bloomberg report and other reports suggest that we could expect the overall plant-based food altogether to be worth about $162 billion by 2030. Uh, the question is, how big part will plant-based dairy be there? Because I imagine it will be bigger than it's normally what people buy more, right? Than plant-based meat. So I'm wondering, could it be around 100 million of that? Could that make sense? And then Oatly picking up in the next 8 years 10% of that market at least, which would be 10 billion in revenue.
right, right. Yeah, that's I think that's a good expectation to have long term, right? By the end of this decade. And that's exactly what Team Tony is talking about with ramping up capacity as fast as possible. You can see this chart here, where this is their total production capacity in terms of the number of liters of oat milk that they're producing. So their goal by 2023 is to get to over 1.4 billion of liters of oat milk production. So they're playing as fast as they possibly can for global domination. Also, this is an important slide here to think about too. Is that right now they're relying a lot on co-packing. This is something that Beyond Meat is also doing too, which is easiest and quickest to get your product to market,
But it eats
but
your
it also
margin.
comes at a cost. Exactly,
Yeah.
exactly. Eats your margin. So that's why they want to be driving their own destiny to get to end self manufacturing.
So
Right. Right now, there's so much demand that it's just hard to keep up with that in terms of production. So Oatly has to rely on co-manufacturers to help bring their product to market.
So we're
Um,
talking about this some form of vertically integrated business maybe with time, because they're already, to some extent, since they have so many facilities on several continents, and they don't have to ship their products everywhere, especially not the oats. And if they actually manage to do this too, we're getting close to a kind of like Tesla and a vertically integrated business.
yeah, that's exactly what they want. And ultimately, the target here for end-to-end manufacturing is 50 to 60%. Right. And so if they can get there, that's how they get to that ultimate gross margin and adjusted EBITDA margin of 20%. If they can get that, that would be a significant achievement. And you know, I love stories like this because it's a very simple business. I mean, not simple in the sense I don't want to simplify all this, but it's oat milk. It's a simple product for consumers, right? It's not a complex product. Making it is obviously hard. It's not easy, but from the consumer side of things, it's milk, right? It's oat milk, and it tastes great. It goes great with cookies. It makes a great chai. It's a simple product, and when simple products are brought with great branding, and repeat, that leads to repeat customers. And we see that these statistics are all coming through for Oatly. They have strong customer retention rates, strong brand awareness within the category. This sets the stage for market share domination in a category that is vulnerable. That's the key. Dairy milk is vulnerable. It's very costly. It's damaging to the environment. It hurts cows, and ultimately, consumers don't really care for dairy milk, right? They just drink it because it's by tradition. So, I think all the stars are aligned for plant-based milk to usurp cow milk, and specifically oat milk, to command significant market share within PBMs because of oat milk's taste and versatility, and its applications in cooking as well. It tastes great. Like, if you ever try to make an almond milk chai, that doesn't work because when you try to boil almond milk, it breaks apart. So it's a very, very, it's best served cold, whereas oat milk is great cold or hot. So I think it has all the characteristics needed to be able to really take a big chunk out of dairy milk sales.
Definitely, definitely. All right, but so when talking about we talked about in the future actually maybe making some form of a comparison between the two companies, right? Between Beyond Meat and Oatly. But I think that will be take too long now. But I think that is something we should probably do in the coming weeks. Especially since they're going to have their report soon too, and that would be. But right now, I think we talked about that in the last week's video. Right now, I wouldn't say I'm still long term very bullish on both companies, but in many perspectives, obviously, and if you look at the balance sheet also and the potential, the margins, the revenue growth now, obviously, Oatly on paper looks like the better deal.
I'd say so. Yeah, Oatly has better growth, has easier route to gain market share, um, but and the shares are cheaper. They trade at a lower multiple than Beyond Meat even now. So I think Oatly is in a better position than Beyond Meat currently. I still do think that Beyond Meat has bigger upside though than Oatly does, because plant-based meats, relative to total meats, if it ever does get to even 5 to 10%, I think Beyond Meat has a more dominant position within plant-based meats than Oatly will within plant-based milks, because milk is easier to produce. It requires less R&D compared to plant-based meat. So I think that Beyond Meat has a stronger economic moat, which is an R&D moat, than Oatly does. So I
However,
think Oatly
also
is a lot
more
more
operational costs and more R&D costs, of course, which
right.
is in Oatly's favor then. But yeah, but all right, but this is definitely a video we should do and go into more greater detail soon because that would be really
Mhm.
fun.
Yeah.
So all
So
right,
that's my basic target here: 184 revenue, and a $55 million loss at the EBIT line. So that's the operating income line. 962 for next year, and 331 EBIT loss for next year. I still think that there's going to be some gross margin, concerns for next year as well. So it's going to be a difficult time overall in terms of the bottom line and the cash burn for both Beyond Meat and Oatly. So I do think that both companies are going to need to have a capital raise, if they want to continue to invest in themselves, and if they believe in their future growth, respectively.
yeah,
So long-term bullish. I think there's still going to be some downside in both shares, though.
right. All right, guys. So the actual conference call is going to be now on Wednesday at 8:30 a.m. Eastern time. And me and Mayur, we're not going to be able to live stream that this time. I work then, and I have I'm gonna when I quit work, it's probably over. So I don't know, Mayur and me, we're going to talk about when we'll do a video on that. when that will be best. If we do it on the Friday, or if we do it on the Thursday or something like that. So, but we'll get back to you on that. So, you have any idea now?
I should be able. I should be available. We could do the next day.
Yeah,
That way it's still fresh. Yeah.
yeah, super, super. All right, guys. Thank you today, guys, for joining us, and hope to see you soon. Thank you, Mayur, as always, and we'll be back soon again. All right, peace, everyone.
See you guys.